I'm Matt Bouchard here in New York City for Nareit's REIT Week 2018 Investor Conference. Joining me today is Ben Butcher, CEO of STAG Industrial. Ben, thanks so much for joining us.
Thank you for having me.
Now, can you start by talking about the supply-demand balance in your core markets? And are there any markets where you have any overbuilding concerns or others that you think are particularly lacking supply?
We focus primarily on the bottom half of the primary markets and the secondary markets. And these markets are in pretty good supply-demand shape. So we're not seeing, in most of the markets we operate in, we're not seeing real concerns about oversupply. We do operate in Dallas and Atlanta where there are supply concerns, especially in the southern submarkets. But even in those submarkets, oversupply is something that you can underwrite. So, for instance, South Dallas, you may be underwriting 2 or 3 years of downtime, but that's still something you can look at and understand where value could be. So we don't really see any significant problems given the growing economy, et cetera.
And of course, I couldn't interview an industrial CEO and not talk about e-commerce. A little more than a third of your buildings currently have an e-commerce related activity. How much more do you expect that percentage to change, and what will drive that?
Well, I think it's likely that more and more buildings will have an e-commerce activity within them. E-commerce, I think the stats are middle teens percentage of overall retail sales, so maybe 35 is a lot, but I think you'll continue to see buildings have some piece involved in e-commerce. Dedicated e-commerce buildings. Probably not as much, but buildings that have both brick and mortar and e-commerce in them will probably be much more prevalent going forward.
And lastly, the strong fundamentals in the industrial space have drawn additional investment capital. Now, we've already seen one public-to-public acquisition in the space. What's your outlook for M&A and transactions in general for the space in the near?
Also a significant public-to-private, the Gramercy-Blackstone transaction. So both the DCT and the Gramercy transactions were circa $8 billion transactions, so not insignificant. I think that there is a lot of private capital who values industrial assets highly. Industrial assets have always been difficult to aggregate, so institutions are typically under-allocated to industrial. So I would not be surprised to see additional activity. I actually would be surprised if there was not additional activity given that weight of private capital.
Ben, thanks so much for joining us.
My pleasure. Thank you.
For more from Nareit's REIT Week, be sure to visit Nareit's website, REIT.com.